Hey, it's Realtor Jess here to talk about the four main mortgage programs for first-time homebuyers. We're going to be talking about the four main mortgage programs for first-time homebuyers, which are 3% down conventional, 5% down conventional, FHA loan, and VA loan. Please note that these are for occupancy mortgages. So this is when you plan to live in the house. These are not investor mortgages we're talking about. These are not renovation mortgages. These are just live in the house, love the house, make it your own. These programs are constantly changing, so I'll say throughout that you want to check with your lender about the current rules. What we'll be talking about are the rules as of September 2019, and these vary based on region as well. So I'll be talking about the Washington, D.C. area. Let's get started. 3% down conventional. This is Fannie Mae's Home Ready program. This allows you to borrow up to the conforming loan limit, which is currently set at $484,350, as long as you have a minimum credit score of 620. This program will allow you to put down just 3% of the purchase price from a variety of sources. So that can be your savings, that can be your retirement, that can be gifts from family, that could be a down payment assistance program, as long as your income is less than 80% of what's called area median income. So basically the government breaks down the entire country into census tracts, and as long as every tract has an area, that area has a median income, and as long as your income is 80% of that, you're good to go. And here in DC, that's about $95,000. If you earn over $95,000, you're going to be in the next program. A 5% down conventional allows you to borrow up to $726,525. That's the high cost loan limit. So some areas of the country are more expensive than others, as you know. DC is one of those areas. Some would say it's a high cost area, and therefore we're covered under the high cost loan limit, allowing you to borrow up to $726,525 with a minimum down payment of 5%, as long as your credit score is at least 620. The other great thing to note about this conventional program and the Fannie Mae Home Ready program that I just mentioned, 3%, is that mortgage insurance is cancelable once the borrower's home equity reaches 20%, which is great for lowering your payment just a little bit. I'll talk next about FHA loans and how those are different. FHA loans allow you to borrow up to $726,525, the high cost loan limit that you know now, with a minimum credit score of only 580. So this is great for people who are like, I'm working on my credit, but I still want to go ahead and jump into home ownership. This one only requires a 3.5% down payment, which is great for people who may not have a lot of cash. My second home that I purchased was an FHA. I did not have a lot of cash, and I did not have a high credit score, so this was a lifesaver. The thing to know about FHA loans, though, is that the mortgage insurance, which on FHA is called Mortgage Insurance Premium MIP, instead of private mortgage insurance, PMI, like it is on a conventional, MIP stays on an FHA loan for the life of the loan. So something to consider if you think you'll hold on to the home for a while. Saving the best for last is the VA loan, stands for Veterans Administration. This loan is for service members, veterans, spouses, and other beneficiaries. You can borrow up to $726,525, the high cost loan limit, with only a minimum 580 credit score. And I say it's the best because it requires no down payment. You heard that right, 0% down payment required. So it's phenomenal and an excellent way to be appreciated for your service. We've made it to the end. Just to recap, the 4 main mortgage programs for first-time homebuyers are 3% down conventional, 5% down conventional, FHA, and VA. The loan program that's right for you will depend on how much you're borrowing, your credit score, how much available cash you have, and of course, your veteran status. You'll want to talk to your lender, and I encourage you, don't be afraid to ask questions. I also encourage you to get loan estimates from multiple lenders. I usually recommend 2 to 3. This is what's called mortgage shopping. And just like with any big purchase, you want to make sure that you're getting the best rate. The great thing about this is that under federal law, you can have your credit pulled multiple times as for a mortgage estimate. As long as it's within a 45-day window, it all gets counted as one inquiry. You heard that right. You can shop for your mortgage and not hurt your credit score. I'll drop a link below to a great CFPB, that's a Consumer Financial Protection Bureau, article explaining this because I want you all to be informed consumers and homeowners. Thank you for watching to the end. You are truly helping this queen achieve her dream.